Go ahead.
Welcome to the Roaring Twenties. Everything is going great. The economy is booming. Stocks are rising. World War I or the stealth phase is over, and there's boom across the country. Life expectancy is rising for Americans thanks to new medicines and vitamins. Industrialization is now taking place. Steel production, building construction, automobiles, and railroads are all being built across the country. The assembly line made production faster and more efficient. Companies returning huge profits. This is part of the awareness phase. There was a slight sell-off in bear trap in 1921. Nonetheless, Americans began investing heavily in the stock market. Thousands and thousands of dollars. Life savings were being invested. 1922 and 1923 marks the beginning of the mania phase. As you can see, these people have just finished a long day's work. They're going to start the weekend off right at a cocktail party. They'll make small talk about how great life is, brag about how much money they've made on the stock market. Investors were very arrogant at this time. Educated and uneducated investors alike made crazy money in the market. Investors even bought stock on margin. As much as $9 was borrowed for every dollar invested. $8.5 billion was out on loan, more than the entire amount of the currency in the U.S.
$1,000? What? Well, thanks for sharing. Yeah.
You get an idea of how happy Americans were during the Roaring Twenties. Everything is going great as news of the stock market spreads around. Just take a look at our friends dancing together here. Keep in mind that homosexuality was becoming more accepted at this time. Our actors now take a quick nap after a long night of partying. They will all get up and vote tomorrow morning. Women now have the right to vote and can't wait for their first opportunity. As you can imagine, this was a big step in American culture at the time, and just added to how great everything was in the 1920s. The election is between James Cox and Warren Harding. After they vote, these optimistic citizens are headed to the bank to take out some more loans to invest with. These people had all the confidence in the world in the stock market. That's why they decided to invest on margin to make their gains bigger. At this point, Wall Street had disconnected itself from the regular economy, which was struggling in 1928. But the stock market continued to expand. It is now the summer of 1929, and the market had reached an all-time high. This marks the end of the mania phase. These Americans are still feeling lucky. They're even going to camp outside Wall Street to give the opening bell trades a nice morning. The next day of trading has begun, and economists are speculating a plateau and fall in the market. Shoeshine boys are even recommending investors to get out before it crashes. Panic starts sweeping across the nation as investors become a little skeptical of the stock market.
If you say so, I guess we get out.
On Wednesday, October 23rd, investors sold out of their blue chip stocks. Panic continued the following morning as the market fell even more. $10 million was sold out in 2 hours. People were shocked. Big money bankers came to the rescue as they pumped millions into the stock market to stimulate it and regain optimism. The bankers withdrew the money on Friday, assuming they resolved the issue. Our investors were going to celebrate with a short cocktail party, but there wasn't much celebrating after that. This is the blow-off phase and also the bull trap. They will rest calm and peacefully tonight for the last night of the next decade. The investors again head to the stock market. The Dow experienced a record loss on Black Monday, October 28th, with a loss of 38.33 points, or 13%. Black Tuesday followed with an additional 30 points, or 12%. Pretty much everyone lost everything they had and more. The entire country was devastated. Black Tuesday is known as the worst day in market history. Some got out in time, some made it rich by shorting just before the collapse, but most lost everything. Bankers did not come to the rescue this time. The amount of trades on Black Thursday was not met for over 40 years. The ticker did not stop running until 7:45 p.m. that night, and the market lost $30 billion in just 2 days. The following day was a one-day recovery of 12%, and the market fell steadily after that. It fell until November when the market was closed for a 3-day stretch. This is the return to mean and end of the bubble. The following year was the beginning of the Great Depression. It scarred the American psyche that was prevalent during the roaring 20s. Tons of people committed suicide. Americans lost all faith in the stock market. It took a decade and a half for the market to recover. Investors who bought on margin have lost everything. The Dow did not reach the 1929 high until 1955. Extreme euphoria and irrational expectations led to this financial crash, and on-margin investing compounded the problem. The impact of this crash on the Great Depression is still debated to this day, but its effect on the American people was tragic nonetheless. Stocks were down a total of 80% in 1932 from the 1929 high. Many banks failed as well. People roamed the streets without any food, money, or shelter. This remained until the end of the Great Depression.